Good morning, afternoon, or evening, depending on where in the world you are watching. Welcome back to Afternoons with Aces, presented by Tom Simkiss and Lee Briggs. This is the second of several presentations we'll be giving over the coming weeks and months in our cloud reporting series. Today we're going to focus on chart of accounts hierarchies. So, quick agenda, we're going to do some introductions. We're going to talk about account hierarchies, what they're used for. We'll talk about what you have to have and what we recommend and what Oracle recommends. You should have at least two per segment, two hierarchies per various segments. We'll talk about some tips and tricks. We're going to talk about importing them, how you bring them in through the rapid install loader. Lee will go through some specific steps and some best practices with that, and he will actually show you how to do the upload and import. We'll talk a little bit about hierarchy maintenance, and then we will talk about how to generate a financial report using account groups that you can set up through the hierarchy. We're going to exclusively focus on hierarchy setup and maintenance for cloud ERP. Some of these tips and tricks may be applicable for EPM, but that is not Lee and I's wheelhouse, so we will not be covering it. Next, we're going to do introductions. Lee, you want to do an introduction?
Absolutely, Tom. Thank you. My name is Lee Briggs. I've been working with the Oracle applications for the best part of 25 years. I've worked with EBS for the first 12 years of that, and for the last 13 years, pretty much since Oracle cloud has been available generally, I've been working with cloud. I am the Cloud ERP Team Director here at Creo, now an SMX company. I am an Oracle Ace. I got my Oracle Aceness in 2013. I started as an Ace Associate. I'm now an Ace Pro. I've been an Ace Pro for 8 years, I think. And I am the first Star Presenter of the Year award winner, awarded from OATUG. That was in 2014.
Oh, thanks, Lee. My name is Thomas Simkiss. I am the Commercial and SLED Practice Director for Creo Consulting, now an SMX company. I've been with Creo since 2017. I have my Bachelor of Arts in Economics and Business Administration from Ursinus College, and I got my JD from the James A. Beasley School of Law of Temple University. I've been working with Oracle for the better part of 25 years. Started out as an end user when I was a staff accountant at a company called Real Treatment Centers, and they implemented Oracle, and I liked it so much I decided to get into consulting, and I've been doing it for the most part ever since. I'm also an Oracle Ace. I got my Ace in 2014, 1 year after Lee. As another side note, Lee and I have worked together through various companies for the better part of 22 years. So Lee is generally referred to in our small circle as the first Ace, and I am always referred to as the second Ace. I am also the OETUG Star Presenter of the Year Award winner in 2017, again after Lee got his. And with that, let's get into our account hierarchies. Lee, you want to take it away?
Absolutely. So account hierarchies is something that was introduced that wasn't in EBS. A similar kind of concept was out there. You had children, you had parents, but with cloud, we can have S-Base on there, and account hierarchies is an important part of the S-Base area. So it makes your system maintenance a lot easier in a ton of areas. It's not just a reporting thing, even though this series of presentations is around chart of accounts and reporting. Account hierarchies are not just used by reporting. So you can use them for inquiry. I can look at detailed balances. So rather than just saying show me accounts, I can just say show me the parent of revenues, or show all the revenues out there. You can use it in account inspector. So let me bring back all those individual balances for all my revenue for all my West Coast locations. We can grab that easy in the applications itself as an inquiry. If you do allocation, so you're doing math based on something, so take away all my rent expenses, break it out by square footage of each location over the total locations, hierarchies will be in play in there. You can do revaluation, so whatever account you're looking to revalue at the end of each period, you can use hierarchies to do that rather than just defining the rules for each individual child. Cross-validation rules, you can say, again, rather than doing ranges, because ranges might not necessarily fall in place, you can say, for all my revenue accounts, I have to have a cost center, something like that. OTBI analysis, that one's going to be a later session. There's actually configuration you have to do to get the hierarchies in OTBI. So we will talk about that, but you can use hierarchies there, as well as segment security in my chart of accounts. It's something that segment security is something I've seen in a few implementations, definitely not all of them. But when you start saying, Bob can see cost center 123, 148, and 207, rather than building out those individual three individual rules there. You can say Bob is the parent of those three values I set out there. The security works for those. Now, the cool thing with Essbase is Essbase calculates balances based on those hierarchies. It pre-calculates that. As soon as you post something, every possible combination of that hierarchy is updated out there. So your reports, your allocations run a lot faster rather than let me run a report and go and calculate the balances. The balances are there. It's just pulling them together. So from a performance point of view, it's going at a lot quicker. Tom, you got any comments around anything else there?
No, I think you covered it all, Lee.
Awesome.
Next slide, my friend.
Oh, okay, thank you. Sorry, I was looking at the screen and it wasn't moving. Okay, so everything we're going to talk about the hierarchies, we pulled some documentation from Oracle. So you can maintain your hierarchies in the applications manually. However, from an initial implementation point of view, there is a file-based data load or FBDI process where you can load both your segment values and the hierarchies. And on my implementations, I use this all the time. So rather than trying to maintain it manually, just build the hierarchy out in the spreadsheet, build the values out in the spreadsheet, and go through that. The link that you see on screen is current as of today, so 23D. That link is current. I do not believe that FBDI file has changed very much in the last 6 or 7 years, but it is out there. So the other thing to think about with your account hierarchies is future-proofing everything. Future-proofing your reports and future-proofing your smart view analyses. We're going to touch on this as Tom goes through the next couple of slides, but every segment should have at least 2 hierarchies, and Tom will talk through why you should have at least 2 hierarchies out there. Similarly, each hierarchy can have versions. So you can do date tracking, all that kind of stuff. You should have 2 versions out there just to future-proof everything. Doesn't mean they have to be different, but you should have 2 versions and you should have two hierarchies out there. So Tom, why don't you tell us a little bit more about that?
Sure. A quick note before we go on to the next slide. If you use the rapid install template that Oracle recommends, when you upload it and go through and do all the steps, Oracle will actually create 2 versions for you. They will create a version called base, and they will create a version called current. And we can talk about some uses for those as we go through it, but that is why we recommend, even if you don't use the rapid install loader, you have multiple versions for your hierarchy. So what does that mean? Right? We have at least 2 hierarchies. Hierarchies can do a lot of different things. You can have a hierarchy which would be for GAAP reporting. You can have a hierarchy which would be for management reporting. Those are 2 different hierarchies. And that's not what we mean by versions of the same hierarchy. What we mean is under your GAAP reporting hierarchy, you're going to want to have a version called base. And you're also going to want to have a version called current. And that allows you can always use your current on all of your allocations and all of your reports. So what do we kind of mean by that? When you're building an FRS report, you can pick values from a hierarchy. And as long as the hierarchy is deployed and the hierarchy is active, you can see it on those reports. So when you're building your reports, when you're building your allocations, we recommend you always point to your current hierarchy. That way, if and when your current hierarchy changes, all of your reports and allocations are updated automatically. So let's kind of go through that from a practical example, okay? You have a hierarchy called current for GAAP reporting. You're building your financial statement, your income statement, your balance sheet, and you're picking your total assets, and you're picking that value. You'll pick the value of total assets from that current hierarchy. You deploy it, you run the report, and it's going to include total assets. Now let's assume 6 months from now, that hierarchy needs to change for whatever reason. You categorize something differently, you're restating, you're changing what you want your current assets to be. What does Creel recommend you do? You will make a copy of that current hierarchy and you will rename it old, or you'll call it 2023 version, whatever is indicative of what that hierarchy represented at the time it was active. You will then go into your current hierarchy and you will make changes. You'll rearrange your assets. You'll make whatever change that you need to do. You'll save it, you'll deploy it, you'll publish it. You'll do all those things that Lee's going to go through in his examples later on. But your FRS reports, your allocations are still pointing to that current hierarchy. So when you run those reports, they automatically include your updates. And you say, Tom, that's great, but I really want to look at my hierarchy as it was. I need to kind of go back and I want to get it as it was. Okay, great. In that situation, then you will need to either update your FRS report or your allocation, or again, as Lee and I prefer to do, you will make a copy of that report or that allocation. And you will rename it using a similar convention as you did for your hierarchy. So again, 2013 or 2023 FRS report, or 2013 or 2023 allocation. Then you will update the FRS report so it points to that version. So rather than getting assets from the current version, you would change it so that you're getting assets from the 2023 version. And that allows you to report as things were. Now, the really cool thing about that is using hierarchies, depending on where you position your accounts and using your trees and where you place things on the report, you can very easily get a report of assets as it was in the 2023 version and assets as it is in the current version, and compare and contrast them so you can see what the value in your value, what the changes in your value set if you're doing a restatement. Lee?
Yeah, so that kind of talks through how our process works from a technical point of view. The reason you go for at least two hierarchies. Let's suppose you are building a financial, you've got no hierarchies at all, and you build a financial report. You can refer to value 001 in the report. The report is going to work fine. It's going to pull back 001, whatever that refers to. As soon as you publish a hierarchy, which includes that 001, and you run that report, the report will error out. It will not work for you because 001 exists in two places. And if it exists in two places, which version do you want me to use? It's not going to work. So let's pretend, so that gets us to the kind of first part of technology. You're going to say, Lee, I'm on board with this. I get it. I'm going to build a hierarchy. Great. You build a hierarchy. You build a hierarchy with a parent. That parent, as Tom said, is assets, current assets, whatever. You run that report, assuming the hierarchy is published. The report is going to work since assets works. You build a second hierarchy. The report is going to error out because assets exist in two hierarchies. The definition of the report had assets. Didn't have anything about the hierarchy because there was only one hierarchy. Didn't have a problem. So the concept is build two hierarchies out there. As soon as you build two hierarchies, when you build this report, it's going to be assets from hierarchy 1, assets from hierarchy 2, whatever it is. Even if we'll get onto the versions, it's the same kind of concept with the versions, but you build those two hierarchies. As soon as you got two, then the third one isn't a problem because your report was assets from hierarchy 1. You add hierarchy 3, hierarchy 4, hierarchy 5. The report is still looking at assets as it exists in hierarchy 1. As you said, the reason you build those multiple hierarchies out, to Tom's point, a gap report is different from a management report. The hierarchy could be different for cross-validation rules. It could be different for revaluation. It could be different for allocations. All different ways you could have hierarchies. You could use them. They're the kind of things you start thinking about for why would I need a second hierarchy? So I think, Tom, if we go to the second report, let's talk about the versions of those hierarchies.
All right, so at least two versions per hierarchy. Again, that gets to the base and that gets to the current. Lee actually covered a lot of this on his on the prior slide, but again, the base and the current is the nomenclature you get out of the box if you load from the rapid install template. I use this nomenclature even if I don't use the rapid install template. Essentially, base is this is what we deployed when we went live. You probably will never ever use it again, although you very well may. It's perfectly fine. Our nomenclature is as we go through when I do my versions, I'm always using current. That is our nomenclature. We do not use V1, V2, V3. I use current, and then I will gotta go through and do my iterations, and whether you use a year or whatever it happens to be. But we do have different hierarchies for different purposes. That is not the version. I know we said this a few times, but I really do want to stress the differentiation. Having an account hierarchy that you use for allocations, you might have operating and SG&A and all different types of expenses in one hierarchy because you want to allocate those. And as Lee said at the beginning, the really cool thing about allocations in Essbase, you can use them in calculations. So it's going to store a value. It's going to have a value that's readily available for you to use that combines those different elements in the hierarchy. But that is independent of the version, right? So if you're going to have a hierarchy for allocations, you're still going to want to have a, allocations hierarchy current or current, 2023, 2024. Again, I'm not a preference. I don't like putting years or anything in my hierarchies unless I'm kind of deprecating them or using them for historical purposes.
And so far we've focused on natural account for this, because natural account always makes sense. I've got my assets, I've got my liabilities, I've got my equity, which is made up of revenue and expense. So you get that. But the concept is the same for every segment in your chart of accounts. So the one that always comes back, that always gets multiple hierarchies, is if you have something like location in your chart of accounts. Tom and I have done a bunch of implementation with retail clients, where they will have, we've had clients with thousands of stores. You probably have one in a mall near you right now. Where you have those 1,000 stores, they will have those locations typically in their chart of accounts. And you start doing, let me do management reports. And I want to do it by sales location, because they're going to get reorged all the time. Great, not a problem. This is what we mean by Mid-Atlantic. This is what we mean by Northeast right now. And that's for sales purposes. And they're going to say, well, we do a ton of advertising on TV. Do it by TV market. Completely different hierarchy. Let me do it by directorship, management, whatever it is. Completely different hierarchy. So it's using that same concept of, I'm still posting every entry I made here to the King of Prussia store. But from a reporting point of view, King of Prussia is going to be Mid-Atlantic, it's going to be the Philadelphia TV market, and it's going to be Bob, who is the executive in charge of that area. So it's that same concept, same value, same balances going in there, going to different places at the same time.
Okay. Last good use case, at least for location for hierarchy that we have on this slide, and we'll move on. And I use this quite a bit when I have discontinued operations. And whether it's discontinued operations or at the company level or the location level, it's a really great thing to do to have a discontinued ops parent in your hierarchy someplace, that value. And then as you deprecate a company or deprecate a location, you can literally just drag that value from where it sits in the hierarchy to the discontinued ops section, and it falls on that section of your P&L. Really good functionality. All right, Lee, you want to talk about hierarchy definition and some tips and tricks?
Absolutely. And the first thing Tom's actually covered straight away there. Every hierarchy should contain every detailed value, child value, whatever you want to refer to it. Every hierarchy should contain everything. And the reason that we say that is, and we'll come to this slightly later on this slide, I want to be able to prove that my hierarchy is correct. And this is one of the big differences we see between ERP folks and EPM folks. On the ERP side, I need a trial balance to balance. And you're going to say, Lee, a trial balance is always going to balance. Yeah, out of the box, Oracle's no hierarchy is going to balance because it contains every value. But you want your hierarchies to be able to get you a trial balance to show that it is $0, £0, €0, whatever it is. It has to balance. The only way it can balance is if all our hierarchies contain all our child values. To Tom's point, discontinued operations. Great, happens all the time for locations, for whatever reason, happens out there. In our hierarchy, we should have at least a discontinued operations, not used in this hierarchy. I've seen clients who have used hierarchies for security. They don't use some of those values, not used in this hierarchy. But you put it out there to ensure that you've contained everything. If you haven't contained every value, your reporting is not, if you're using this for reporting, is not going to contain those balances out there. So you want to make sure that you've at least got it somewhere. As we continue with our hierarchies, a segment value can only exist once in a hierarchy version. So I can't say intercompany goes here and there. Intercompany can be in one place or the other. Intercompany payables can roll up to payables. Intercompany receivables can roll up to intercompany receivables. But if I have a single intercompany value, it can only exist in that example, payables or receivables. Something to be cognizant of. Maybe you just have a separate section for intercompany. I digress. But you're looking for that kind of value. Now, from our point of view, one of the Creo tips and tricks, or the Tom and Lee's ideas, is you have one parent at the top. You don't want to just have like three parents at the top. You want one parent at the top, just to make your life easier, so you can say, grab everything, or grab everything in this hierarchy. Grab that top value. We always use T, and that came about from EBS terminology. I think summary accounts used to have T in them. We basically stole that idea because it was like, what else are we going to use? You don't want to use Z, you don't want to use A for all. T, that's what we've used. You get the concept. I want to be able to grab T for all values for all my segments across the top there, and show that it is bringing back a balanced trial balance. And really, these last 3 points are kind of looking at that. Oracle gives you a trial balance. If I were looking to use SmartView or looking to use FRS, the first thing I would always say, once you've got a hierarchy in place, and we'll talk about validating these hierarchies later on, but once it's in Oracle, Let me build a simple trial balance using the out-of-the-box all values for each segment, and it's going to return 0 as long as you're saying look at US dollars, essentially don't look at stat balances. It's going to bring back 0 balance. Once you've got that, use your hierarchies for that same trial balance. So use T for my company, T for my cost center, T for my natural account, T for every segment out there. If it's not 0, it's wrong. You're missing some value. So before you start building reports, build that one. If it gets 0, you can at least get to a decent starting position.
Thanks, Lee. And last point on that, and we will get to some using Smart View tips, I think, later on in the series. One of the things we talk about is when you fill out your required segment values, if you run it and your trial balance doesn't foot, that tells you that one of your hierarchies is off. Now, then you got to go through the work of deciding which one, but the approach that Lee just took is probably the fastest and easiest way to do that. All right, so now we're going to talk about definition tips and tricks. This won't take very long, but essentially, you really want to have your hierarchy logical. Okay, so this is again a natural account hierarchy here. This is the way that we at Creole, or really Lee and I, like to do it. Some folks will have net income as a separate line. That's my year-to-date retained earnings in this little slide here. Some folks will have that so that it doesn't directly line up under equity. I don't agree with that because equity includes retained earnings and net income rolls through current year retained earnings. In my simple mind, it should be a subchild under equity. So that's the way we like to do it. Again, some of my EPM brethren might disagree with this. My EPM brethren also like to flip signs when they load trial balances, so they by nature don't foot to 0. I'm very anti that as well. But keep your hierarchy logical. Make sure that you can easily read it. And again, as Lee said, you want to ensure that you do not have duplicate descriptions. If you have a hierarchy with values in it that are duplicated and has duplicate descriptions, it will not publish to Essbase. It will actually fail. And something to bring back that we discussed in one of our prior sessions was if you are going to have multiple charts of accounts, you do not want duplicate dimension names. That makes Essbase, at least in Oracle Cloud ERP, unhappy. So if you're going to have product in your chart of accounts, and you have a situation where you could have multiple product segments because you have a product in Europe and you have a product in the United States, but it is a different chart of accounts, you're going to want to make sure that dimension name is different. So if you have product and you have multiple charts of accounts, you want to make sure you prefix it or suffix it. We like to use the country. So US or North America, so NA underscore chart of accounts or NA underscore product in this use case, and Europe or EMEA underscore product. That's just kind of the best practice in your chart of accounts. But your hierarchy definition, again, keep your names logical. There's nothing wrong with alphanumerics, and we like good descriptions. So some additional tips and tricks, Lee.
Yeah. So if we look at the hierarchy we had on the prior slide, really you can get a simple balance sheet. And again, this is simple with 3 values: assets, liabilities, equity. That will get me a balance sheet. Now, what we try to do before you even think about putting anything in the applications, get a year-to-date trial balance in your hopefully new chart of account structure or whatever your chart of account structure is in Excel. List out all the child detailed natural accounts and their parents on a separate tab and do a VLOOKUP to get year-to-date balances by parent as you think it's going to be in your chart of accounts. If that reconciles to your financial reports you're getting already, you're in good shape. If it doesn't, it is so much easier to fix a VLOOKUP in Excel than trying to update, to put all these balances in your chart of accounts and then update the hierarchies. So the hint and the tip I give to all our associate consultants: build it in Excel first, just using VLOOKUPs. Yes, cash, this cash account goes to cash. Build it that way. Does my parent cash, does that balance? We're in good shape there. Only then, once you've got it correct for a few periods, start uploading it to Oracle. Okay.
All right. Thanks, Lee. All right. Thanks, Lee. Now we're going to talk a little about segment values and hierarchies using the FBDI. So as we mentioned before, if you use the FBDI or the rapid install sheet, to set up your chart of accounts. It does a lot of great things for you. In addition to setting it up rapidly, as the name implies, it also will set your default hierarchies up for you. Oracles provide an updated file-based data import template that you can use to import your segments and templates. 23D is the one that was the latest available as of this webinar. It might be 24A is coming out. If it's not out already, it'll be out soon. But 23D was stable, and everybody should be on it as of the release of this webinar. So it does provide sample data on both tabs. I would really urge you to, rather than just blanking that sample data out, do a file save as. So you have a copy of the sample data. If you've not used this tool before, meaning if you're not an implementation partner, that sample data is really helpful. Cannot stress that enough. Does a really nice job, and it'll give you some really good guidance. The other thing is, if you're doing this in a dev or test environment, you can upload this thing multiple times. So you can do multiple ledgers, you can do multiple charts of accounts. So you do get to play with this and have a lot of setups and a lot of things that you can do. So you can try to get it right. There's nothing wrong with doing that. That is what a dev and test environment is for. The really nice thing that the validate does, it will let you know if you're using incorrect fields, if you've got information that's missing. And then finally, and this is a relatively new feature, it's been out for about 18 months, but we just started using it. There is some preview information. If you've got your hierarchies and you've got your chart of accounts values and all of your account qualifiers set up properly, using the rapid install tool, you can actually preview what a sample chart of accounts will generate from a financial reporting perspective. It gives you a sample P&L, and will also light up some of the pre-built OTBI infolets. So it's a really good feature. It does a nice job, and we would highly recommend that you do it.
Okay, so the screenshot we saw on the previous slide is, it's a screenshot, so it's a little hard to read. So we tried to list out all the columns you have out there. And I'm going to just look at the important ones, right? So value set code is looking at what is the value set called that you're trying to load these values on. The prior slide is from demo instance, so it's called whatever it is in demo instance. But this is coming back to the naming convention you have for all your segments. So XXX, short name for your company, GL, chart of accounts, company, whatever. You're going to put your value in there. Don't need a start date or end date. It would be rare, I guess, if you're creating all this stuff to put in start dates or end dates, but you can do that. Whether it is a summary flag, so yes or no, and these ones you want to be cautious of. It's a summary flag. If it is a parent, essentially, then typically you will not post to a parent. Typically, you don't budget to a parent. I have seen people budget to a parent, but typically you don't budget to a parent. So this is typically yes, no, no, or no, yes, yes. You have an enabled flag. So can I use this value? Again, if you're loading all this stuff loading all these values to your instance, chances are you're going to be using them. And enabled is an important field to think about. If I disable a value, I will not see it in any list of values. If I try to report on it, it will not exist. So it is a concept to try and think about. The other idea is end dating those values. So rather than disabling it, I can say company 100 is no longer used, end dated as of 12/31/2023. I can still report on it, I can still pick it from list of values, but I can't do anything with it because it's after 12/31/2023. So that's a great concept out there.
Thanks, Lee.
Okay, so from our natural accounts, there is a column out there for financial category. You've got to fill these out at least for the key reporter. I'm a big proponent of using the financial category for all my natural account values. But these financial categories will allow you to identify groups of reports primarily for OTBI. Now, the area you're definitely going to use them in, if you're using accounts payable or accounts receivable, financial categories are used by those two processes to identify what is the accounts receivable account, what is accounts payable accounts. So you're going to look to flag those as AP, and AP liability is truly AP in those dropdowns. For accounts receivable, you're looking at accounts receivable, on account receipts, unidentified receipts, unapplied receipts. They should be flagged as AR. But those groups of categories, Tom kind of alluded to this earlier. It will actually use to light up some dashboards as we go through that. We are going to cover that on a later slide in this deck.
Okay. All right, so as Lee hinted at, and I hinted at on a prior slide, filling out these segment values in the hierarchies and filling out that financial category is super important. If you do it, we get to preview what these things look like before you load it. So if you've got an error in your hierarchy, you have the opportunity to correct it before you have to correct it manually in the system. If you're doing a mapping, whether you're doing a conversion from another chart of accounts, you're doing another conversion into Oracle, you can check if your lookups are correct by just doing some simple Excel tricks. You can use Excel in these things and then populate the values into the financial template before you upload it. There's a really good Oracle support note on the impact of removing the financial category in chart of accounts. It talks through this process if you've got to change it. There is also a process to change your categorization. So meaning if you set an expense account up as an asset or you set an asset up as an expense account, there's a process that you can run to correct that. Just like there was in EBS, it will go back and update your values. So if you screw up setting up your financial category or your account type, you certainly can go back and fix it. But obviously you want to get those things correct the first time through. All right, so now we're going to talk about a little bit more about importing the segment values to the FBDI. Lee?
Yeah. So the example I've got up here is a real example. So the first screenshot we saw was from the sample as you download it. This is a real example out there. You can see we've got the value set code as was defined in the instance. Again, this does not follow Creel's naming convention. This was a client that had already gone live. We've got the value. We're showing the summary value. Is it a parent or not? In this case, the first record is a parent. The remaining 5 records aren't. Is it enabled? What's the account type? Is it an asset? Is it a liability as we go through there? Can I post to it? Can I budget to it? Is it a third-party control account? That is a really cool functionality out there. Can you do manual journal entries to this kind of value? Can you not? The financial category, so whether it is accounts payable, accounts receivable, and I deliberately filtered some of this information just so you can see those, and the US descriptions of those. As I said, when you're populating this value, I would suggest using Excel functionality to identify those duplicate descriptions. It gives you your report. Your reports will start looking ugly if Oracle is going to concatenate value and description as a description. So an easy hint and tip there is to just turn on in Excel. Just look for duplicates. As soon as you get a duplicate, change it. In my opinion, you want your report to be correct. So if your report is pulling parents, get that description correct. Maybe put for the child version, which is similar, pluralize it, abbreviate it, something like that. So you've got an idea of what you're posting, but your report is going to look good. Tom, let's have a look at the next slide. I think is looking at a hierarchy.
Okay.
And this is what the sample hierarchy looks like again. Sorry, this is what the client hierarchy looks like again. So you're not expecting everything to line up on the right-hand side. In this particular case, we were loading multiple hierarchies for multiple segments at the same time. So you're not expecting to see everything starting on the right-hand side. Something is going to be in that value column. That is going to be the ultimate child, and it starts moving left from there. So this is a tricky one to kind of populate and kind of get the concept down. But you can see there, the parent that this client used was called top. Underneath there, it's got a parent underneath it for P1000, which is assets, another parent for current assets, and so on and so forth. But the detailed version is looking at those, what you see in parent 2 there. Even though it's not a parent, it's kind of getting in that column out there. The required fields we have for the next on that slide, you're looking at the value set code. Again, it should match what you had previously. The tree code, what is the hierarchy called? The tree version name, so current, base, we've talked about those earlier. And you do have a start date out there. So with the important thing with these start dates, you cannot have, within the same hierarchy, you cannot have versions that overlap. So if base is active, and the example we had was always base and current, if base is active on January 1st, 2000, end date it on January 1st, 2000, start current on January 2nd, 2000, as we go through that. I've marked the other ones as conditionally required, right? So I have to have a value somewhere along those parent 30 to value. It has to be there somewhere. It's conditionally required, so it has to appear one place. And that's where we started looking at Oracle doing validation in the FBDI. It's making sure that you don't have a child sitting essentially as immediately as a grandparent. It's always going to fall under a parent as we go through that. Okay, once you have populated that entire FBDI, there are embedded macros out there. So what will the macros not validate? It won't validate you got a segment length correct. Now, I always, when I'm building this out, I will kind of put conditional formatting in there again to make sure that at least I haven't exceeded the length. There's nothing wrong with having a shorter parent out there, a shorter parent value name, but it won't validate that. It's not going to validate segment descriptions. We talked about that. Conditional formatting, just identifying those dupes. We talked about that. But it will validate that your required fields are populated correctly. It will make sure that if it's a yes or no, you've got a yes or no. If it's looking at those financial categories, it's going to make sure that you put in AR, you haven't put in accounts receivable. It will value that your hierarchy is structured correctly. It's not saying it's right, but you've at least got stuff in the right area. It's also not going to validate that you put a child value, something you've identified as a not summary, as a parent out there. Once you've done your validation, you generate the CSV file. There is on the first tab, there is a hit the generate the CSV file, and it's going to give you a zip file which you're going to save locally. Okay.
All right. So you've got it saved locally. Now what are you going to do? You're going to go into the cloud applications. You're going to go under Tools, Schedule Processes, and Schedule New Process. And the name is Load Interface File for Import. The import process, you can import your segment value hierarchies, and then the data file, well, that is what the zip file that you just generated was. So you import this process, and it spawns a couple different jobs for each segment that you've populated in the FBDI. And then obviously it will generate a log file, and you can review that if there's any duplicate issues in hierarchy. Shouldn't happen if you run your validate process and if you've done your pre-work, but it really does a nice job of catching you. So, the point we've been trying to highlight throughout a lot of this session today is that you want to protect yourself from duplicates. You want to try to do the right things, but Oracle really does a nice job in the the FBDI spreadsheet and also in the import process to protect you from yourself in case you're doing this quickly. So hierarchy maintenance. Whenever a version is created or updated, the following steps must be completed for each version. You want to change the status to active. When you're editing the hierarchy, you have the option to keep it active now. That wasn't always the case, but you do. But you can also set it to draft mode. If you set it to draft mode, that does impact reporting and your ability to use it. So if you're maintaining your hierarchies, we recommend after you're live, you don't maintain your hierarchies during the week and certainly not during the close process. We get that may happen, but you really do want to try to do it off hours if at all possible. So once you set it to active, you want to force flatten your columns. You got to manage your hierarchies. You should also flatten your rows. You can schedule that process. We typically tend to do it online. I will tell you, the longer you've been live on cloud, the more hierarchies you have, the more complex and dense your cube, the longer this process will take. So you will get to a point where you may want to schedule this process and have it run in the background. You obviously also want to publish your hierarchy. If your hierarchy isn't published, you can't see it in the cube, can't see it in any reports. If a hierarchy version is used for segment security and it is not in active status, users will not be able to see their segment values for their segments when entering journal entries. So if you're using it for security and it's not active, you could ground your whole close process to a halt. So again, when you're doing these things, if you're going to use a hierarchy for segment value security, and Lee and I have somewhat differing opinions on this, whether it's a best practice or not. I think it's a pretty good shortcut, but it also has some risks with it. Please make sure you don't do this, as I said, when you're in the middle of your close. There's some really good notes on this about what could cause this. The note is listed herein. And again, I'm a big advocate of using the hierarchy for segment value security. All right, so now we want to generate some financial reports and account groups. And what do we use these things for? So account groups. These can be automatically generated using a job. There is a program under Oracle Schedule Processes. So the same navigation we gave a few slides ago. You're going to use the Generate Financial Reports and Account Groups process from the Schedule Processes. And you run this, and if you pick your top revenue account, top expense account, Oracle will generate a rudimentary P&L. Now, the nice thing it does is, and we'll go over this when we create financial reports in a few presentations from now, but you need to create a name for where your reports need to live and what they're going to look like, and you have to do that under FRS. If you run this job, Oracle does it for you, and it can be used across your environments. It will also generate some rudimentary account groups. Account groups are very useful in your account inspector. If you go under your account monitor, under your close monitor, it's a key component there. You can get a high-level P&L there as well as detailed account groups. If you're not sure how it works and how to create them, running this job will give you a really good idea of what it does. Again, this creates account groups based upon your top revenue and top expense accounts. But using hierarchies and using parents, you can create far more detailed and far more robust account monitors and also financial statements. So what comes out of these things? So for the balances cube, you identify your chart of accounts, you identify your calendar and the request submission. What are the types of reports you get from the standard job? You get an income statement, you get a consolidated income statement, a rolling quarterly income statement, a rolling monthly income statement, and you also get a trial balance by ledger and currency. Notice you do not get a balance sheet out of the box. We will go over creating a balance sheet in a few sessions from now. It's relatively straightforward. If you do your hierarchy properly, you can get a pretty decent looking balance sheet with one line. You can get a really good looking balance sheet with just the 3 lines that Lee mentioned, assets, liability, and equity. But you can get a even better looking balance sheet with just about 5 or 6 lines. You'll see this when we do the presentation a few weeks from now. But Lee and I are very minimalist in our designs for FRS reports. I'm a firm believer that the fewest rows you can have and maintain, even though you can use templates, the better off that you are. But it creates that database connection, as I said, and that is used by FRS. You want to ensure that you got the same connection across all instances. You may see this if you had somebody that put in your implementation that didn't know what they were doing or wasn't sure at the time. You might see a database connection called prod. That's a bad idea because when you do a clone, that database connection will still be called prod. If you don't run this process and you create your database connection, Lee and I advocate, calling something called FIN or GL, because you can also have a database connection to projects, and you could actually theoretically have a database connection to cash management. They each have their own cubes, and you can do reporting from them. So we tend to use a database connection name that is indicative of what it is used for. But again, if you run this process, it does it for you.
And the important thing with those database connections, again, cloning back, yes, it's kind of problematic to be in test and seeing a prod connection. It's worse when you're going forward. So let me start my implementation. I'm in dev, and I call it dev. When I go to test, presumably I'm going to call it test, but any reports I just built in dev can't go to test because dev was called dev and test was called test. So having this naming convention all the way through suggests anything I build in the GL connection will go from the dev GL connection to the test GL connection just fine because they're both called GL. It'll go to prod because it's called GL. So you're getting that consistency all the way through from the beginning.
Thanks, Lee.
Okay, so Tom talked through the reports you get that we get out of there. So by definition, the income statement that you get from running that process, the consolidating income statement, the rolling, the trial balance, whatever. You also get those account groups which are shared across different infolets. So just by picking the top revenue account, you get a revenues infolet. And that is used on the general accounting infolets homepage, unless you've got some other default out there. It will be used automatically there, set up for you. The expenses one will automatically get set up in the expenses infolet. That comes through again. It's on the general accounting infolet's homepage, unless you put something else in there. That will show up. From the close monitor, and close monitor is some functionality I really love. You can get a summary income statement as an infolet, and I've actually got a screenshot of it on the next slide. So this can actually show up in close monitor, and it's by ledger set as you go through there, or ledgers as you go through there to go through there. So let's take a look at an income statement. The next slide we have, this is what you actually get out of the box. Now, would I give this to my executive? No, but I would use it. I would certainly take a look at this and say, and again, this is dummy data. This is out of a demo instance, but at least gives me something that I didn't have to build and say, yeah, yes, I like the look of this. Now, I would also say, why do I have cogs in here a couple of times? Well, that's how the demo instance's hierarchy is kind of defined. So it includes it out there. But I get something that shows me what my net income is. It's looking really good. This one is consolidated. You get a consolidating as well. But I would be happy with it.
Yeah, so just a general comment here. Lee and I have done a lot of rescue projects over the years, meaning projects where other SIs have gone in and done the implementation. The amount of clients that we go into that do not get their financial reporting from Oracle using FRS is staggering. And it's a combination of their hierarchies weren't set up properly. The consultant didn't know how to use FRS, and they might not know how to use SmartView, and they didn't do some planning. So if nothing else, if you do a little bit of work on your hierarchies, you can run this tool and get this financial statement out. At least it shows something. So, to Lee's point, would I give this to a CFO? Probably not. Would I give it to a controller? The answer is probably yes. And could I give this as a basis for creating a briefing book or a reporting book? The answer is yes. It's a really good starting point. Can't stress that enough. The values of hierarchies and the values of setting all those default properties.
Yeah.
Got an info tile here. This is a closed monitor summary income statement. So this is a info tile that comes out of the box. And you see this a lot in the demonstration environments, but this does work. You run that process. This info tile is on your home page under general accounting. So it's there under user defined or system info tiles. It gives you a great idea of what you can accomplish and what Oracle does for you out of the box. All right, finally, any questions or comments? I didn't see anything that came up in the chat window, but we will give some folks some time if you do have any questions. I do see one, if this will do anything with OTBI. And I'm not sure, we are covering OTBI in another session, but Lee, anything we covered today, because we didn't go over labels or anything, which we will do later on for OTBI.
Yep, so OTBI we're going to be doing in, today's session is the second session. I think we're doing it on like 10th or 11th session. It's out there a little bit. To get hierarchies into OTBI is going to be in a later session. We do have it. We do have it upcoming, where we're talking about getting the hierarchies, getting all the different labels out there. So that will be coming out there. Really, we talked about here is that financial categories, get these infolettes we just saw out there. That gets those in there. Getting the segment value, getting the top revenue, top COGS, top operating expenses, getting those out there, gets those infolettes. But OTBI will be covering probably in a few weeks from now.
Okay. We are coming up on about 47 minutes into this webinar. We appreciate everybody's time. We're going to try to wrap up currently. And again, if additional questions come up, please make sure you send them to the email address that was listed in the registration. We look forward to seeing you guys in the next Afternoons with Aces. Have a great rest of your day.